Welcome back, everyone. Hope you had a great afternoon. I know you had lots of interesting information to absorb and chew on. We're now going to have a panel discussion, and I'm going to introduce the host of the panel. And just to let you know that it is one that will welcome your questions. There are microphones at the front of the room. Don't be shy. So when the time comes, if you have questions, and I'm sure you will for this group, just come up to the microphones and we'll bring you in. I want to invite Jeff Van Duynhoven up to the stage. He's going to moderate this panel. He is president of Merchant Service. No, he's not. He used to be that, right? Whoa! I don't know if that's a demotion or what. He used to be president of Merchant Services for TD Bank. He's not anymore. He's executive director of Modernization for Payments Canada, and if that sounds like he's in the hot seat, you're on the right track. Jeff, I'm going to turn it over to you.
Everybody. You know, at the end of yesterday, we had a great panel conversation. Today, I won't promise the same degree of entertainment, but you know, if there's not calf roping or steer wrestling here on stage, we'll certainly have it afterwards with the rodeo. So I'd love to start by asking my fellow panelists to come up on stage and join me up on stage today, and then once they're here, we'll introduce them.
That is bright.
So great. We've passed our first test. Everyone sat in the right chairs. That's great. So thank you for that. To my left, we've got Jan Estep, who leads the NACHA. I've got actually proper titles here, so I better pull those out so I get this correct. So she is the president and CEO of NACHA. To her left, Victoria Richardson, who is the general manager, payments direction, from the Australian Payments Clearing Association. And then next to her is Walter Volker, who is the CEO of the Payment Association of South Africa. And then Steve Wiggins, who is the CEO of Payments New Zealand. And then at the far end, Tim Yudin, who is the Director of Design and Delivery for Payments UK. So we have an excellent, esteemed panel here today to share about our international experiences. Jerry, if you were in the session this morning, you know that Jerry touched on our next steps for modernization here in Canada, the fact that we've completed the vision and that we're moving now to an evaluation of options. So for us, this is timely to benefit from the experiences of our panel here. And as Amanda said, I've got some questions to start us off, but please, as you go through, if you've got questions, please note them down, because at the end we will have time to ask questions from the floor to the panelists. So let me start with that with Jan, since she's immediately here. In the hot seat, definitely. So NACHA's been involved with modernizing its ACH system. So how do you define sort of how that process is working, and what are the big initiatives currently underway in the U.S. with NACHA? And if you want to talk to others, that's great as well.
Yeah, well, why don't I speak a little bit to NACHA and the ACH network, but then also two other initiatives in the United States, because there's some dovetailing of the initiatives that I think make sense. And if I could spend just a minute to go back a few years, it's helpful to describe the context. And that is that the ACH network has been around for a few decades, but it has really been in kind of a state of constant change. And by that I mean that it certainly started off with direct deposit of payroll, Social Security benefits in the United States, but it has evolved to support things like check conversion, internet and telephone payments, consumer credits with information, and then perhaps a bit unlike Canada, also B2B payments with voluminous data attached to it, and with that remittance information in a lot of different formats. So a lot of flexibility with that. We've also had innovative opt-in programs, meaning that they're not mandatory for every bank, but very innovative. Going back 8 years ago, e-invoicing and real-time payments messaging on top of the ACH. and at the same time keeping up with regulations and changing end user interface. So I say that because the ACH has been around for decades, but it's not at all the same as it was then. Nevertheless, in 2012, we developed what we called a blueprint for the future and worked with the industry over 6 to 9 months to define attributes that we would strive to achieve over the next 7 to 10 years. And we're moving forward in some of those now since the blueprint was in 2012. Things that we've defined as ISO 20022 integration with the ACH, same-day ACH in 3 months. We will be moving to 3 settlement windows every 24 hours, also continuing to explore and expand upon things like account validation or directories. And as we defined those attributes back in 2012, other dialogue also occurred in the United States, and that's where I'll bridge a little bit from ACH to others. And in 2013, so a year after our blueprint, the Federal Reserve Bank in the United States started to lead a discussion around how should our payment system improve. And that resulted in a paper that they authored with input, again, from the industry in 2015. So last year they published a paper around strategies to improve payment systems in the United States. That resulted in a Faster Payments Task Force, Secure Payments Task Force, and we were fortunate, I think, as I said, dovetailing of initiatives because the attributes we defined in the blueprint really were fairly consistent with some of the things that the Fed called out as things that we should be focusing on into the future. So payments plus information, faster payments, account validation, focus on credits. And as we sit today, there are 22 end-to-end proposals for how to deliver faster payments in the United States. Now, the question is what happens, because it's kind of a quiet time as those are being evaluated by a qualified independent assessment team. And for those of you that might have been down the hall, you heard about one of those 22 earlier today. So a lot of dialogue and anticipation, right, as we think about that. But if I say anything about the United States, it's probably evolution versus revolution, because we think some of the attributes we define for ACH can also be helpful as we move into a real-time payments environment. Sure. So those things are kind of bridging technology and bridging rules to help us move from today into tomorrow.
Okay, great, thank you. Doria, so NPP is obviously underway in Australia. Could you give a brief summary of where you are with NPP and perhaps what's next following that?
Sure. I think before I go into that, I'd like to just be really clear about the 3 things that NPP wanted to do. So in terms of being a new national payment infrastructure, it delivers real-time, data-rich settlement that has better addressing options, more convenient addressing options. And by addressing options, we mean the information that you need to pay to someone. And I think the convenience is a really important part of that. So at the moment, if you want to pay someone, you need their bank account number and their branch details. And NPP means that you can pay someone knowing their mobile phone number or their email. So I think those were the 3 things that NPP set out to deliver. We're now in the testing phase, so having done a lot of the design, and it's been a really good example of how industry has collaborated. I know we've heard that word a lot over the last 2 days, but really it has been a really strong example of when industry gets together with the odd nudge from the Reserve Bank of Australia and a lot of governance support. We're now at the stage where we're testing. Some of the first test data has gone through, and we'll be live at the back end of next year.
Okay, great, thank you. Walter, so 8 years ago or thereabouts, I think South Africa introduced what's called real-time clearing, or RTC. Can you explain sort of what that is? Because that's the early days of sort of immediate transfers or faster payments. Can you explain sort of what that is and where that sits today from the future?
It's in fact, this year it will be a decade. So it was 10 years ago. We introduced same-day settlement in the late 90s through the RTGS. So we had same-day settlement going back to about 1998. And then in 2006, we introduced real-time clearing, which was immediate payments for basically retail payments up to about $500,000 was the cap. Anything above that would be immediate settlement as well as immediate clearing through the RTGS. Initially, there were only sort of 2 or 3 banks. As we stand now, there are probably about, well, I would say 90% of the banks are on board, and it's growing by probably an average of 3% per annum still, so there's still tremendous growth. And it is immediate, except that I think the service level is 60 seconds. It has to be within 60 seconds. It has to be from account to account. But you'd find that in practice it's almost immediate. And it is channel agnostic and account agnostic. So you can route it to any account or use any channel.
Do you have a sense of the volumes that are going through there now? Because that's running through the RTGS system still today, correct?
Well, no, the settlement is through the RTGS.
Okay.
So we've got multiple intraday settlement windows. So every 2 or 3 hours we settle, depending on the values. So the clearing is real time, but the interbank settlement is sort of multiple intraday windows. Yeah.
Okay, great. So Steve, in New Zealand, I think you're looking at your payments ecosystem now and the vision, so perhaps not that different from where we are here in Canada. So what, can you expand a little bit on
Yeah,
what
no,
you
pretty
see the
similar.
vision?
Look, over the last 18 months, we've been going through an initiative looking at what the future of the ecosystem is going to look like. And if we compare, say, the Canadians' long-term view and also Australians, a lot of the characteristics are very similar. So we all talk about simplicity, so, you know, making sure we're not taking the complexity of the back end through to where the customer is, all of those sort of things. We talk about faster payments. There's an obsession with real-time payments with Canada and Australia, but we have termed the phrase fast as payments, which is a bit of a Kiwiism, but like sweet as. Have you heard of that one? No, anyway, it's fast as, and that's about being as fast as it needs to be for a particular consumer. We all talk about informative transactions with ISO or some other things. Talk about regulation. Our view is we talk about it in terms of just right regulation, so appropriate for the market for that particular country. And then we all talk about globalization as well. So, you know, the payments are becoming global. How do we take the friction out of those global payments to make it a similar experience to the domestic side of things? So I think the speed thing is probably where we're slightly different. We're blessed with having a really good payment system at the moment, very efficient, high card usage. There's already a lot of real-time stuff happening with the existing instruments. With our existing system, by the end of the year, we'll be settling every hour, bank to bank. And so from a consumer point of view, the experience will feel real-time. So the question is, if you focus on the consumer bit, do you need to build a bit of kit to do that? Or is there another way to do it?
Mm-hmm. What about ISO data? Is that ISO 20022?
Yeah, that's certainly on the cards.
Yeah.
Last couple of weeks, we've been having industry forums, and that certainly came through as, yes, we need to be looking at that. And I think that's probably a priority over speed. And certainly 7 days is more important than 24 hours for us.
Sure. Okay, great. Thanks. So Tim, UK's been at this for almost a decade now, faster payments. So what big lessons have you learned and the market learned, and perhaps some of the benefits or challenges that you saw as well?
So in terms of some of the benefits, I'm going to give you a very personal example, and apologies because I did a dry run of this in the room next door a few minutes ago. So those of you guys that have heard it before, you can have a little nap now, okay? So I am blessed. I've got 3 children. Despite the fact that they've got me as a dad genetically, they're all turned out to be reasonably clever. They've all gone off to university. Well, what I want to do is I want to talk to you about my experience as a parent over the last few years with children at university. And why is that relevant? Because when Alex, my eldest, went to university, his first year was in 1997, and that was before the faster payment system had been built in the UK. He would phone me up, the bank of mum and dad, the chief exec of the bank of mum and dad. Actually, in my house, I'm probably the deputy chief exec, but there you go. So he would phone me up, and he'd say, Dad, I need some money. And I had 3 options. I could stick a check in the post. That would take days and days and days. I could send him the money electronically through the back system in the UK, which is a 3-day cycle. It's 3 working days. invariably he'd phone me on a Friday night. It wouldn't go through till Monday, Tuesday, Wednesdays when he'd get his money. Or I could drive to his university and give him the cash. Those were my options. Nick, my youngest, is now finishing his 3rd year at university. And in June last year, when he was in his 2nd year, he phones me up. He wants to go on a sailing trip with his university to Croatia. I could never do that when I was at university, you know, but he's going on a sailing trip. And he's got cash flow problems. He's working. He's a good boy. I'm going to get the money back at the end of the month. So he gets through the credit scoring. He wants £350. And I'm in Waitrose. Now, Waitrose is a very sort of middle-class upscale supermarket in the UK, and I'm buying broccoli. I remember this vividly. And I now have a different option. I've got my mobile phone with me. I open up my mobile phone. I go into my mobile phone banking app. I look up Nick. I send him £350. And literally about 90 seconds later, I get a text from him that says, "Thanks, Dad." Actually, it's THX. That's text speak. And he's got the money. So what a difference just in a few years from the fastest way was to drive to Alex's university, which was over an hour away. I mean, quite close, really. It could have been up in Edinburgh. To 90 seconds in a supermarket. And I think it was a Saturday or a Sunday as well. So that is what has changed in the UK. And we talked about this next door. So we spend a lot of time talking about the technology and the pipes and the plumbing. We shouldn't do that. I think we talked about that. Somebody talked about that yesterday with Amanda. Don't mention the plumbing. As an industry, we're quite introspective. So my advice on all these things, the experiences, do stuff for customers, and as I said next door a few minutes ago, build it and they will come. So that would be my advice, and I think I can see a couple of heads nodding. Getting there is tough. You've got all the questions about how and when and who pays and all those kind of things, but actually think about it from a customer experience because people are demanding it, particularly the younger generation. They live in a 24/7 real-time world. They want everything absolutely now. Guess what? The genie is out of the bottle in terms of instant payments. We're not going to put it back. The demand will be there.
So that was great for your son, but what about benefits for, and other consumers obviously are benefiting from faster payments in the UK as well, but what about for businesses or the financial institutions involved in that? Are there benefits for them?
Yeah, absolutely. So again, I'll give you a personal example. I've got a window cleaner. He comes around. What used to happen is I used to give him cash or I used to write him a check. But now I can just send him the money via faster payments. And all he does is he gives me his mobile phone number. I don't need to know his bank account, his sort code or account number. I've got his mobile phone number. He sticks a little note through the door to say he's cleaned the windows, and that's how I send him the money. So as a business, he doesn't have to come back as he used to do. He used to come back, a few nights later, knock on all the doors that people weren't at home to pay him the cash for cleaning the windows, etc. So from a business point of view, that's really useful. Another example that I gave is, people are paying businesses increasingly using faster payments, using instant payments, because they can wait right until the last minute to pay invoices when they're due rather than, do it a few days earlier. All of those kind of things are coming out. And there are so many use cases for faster payments. It's unbelievable.
One thing Tim did forget to mention, though, when he was going on about 90 seconds staring at the broccoli, text came back. The Danish chap on the panel said, "Oh, that long," which I thought was quite telling.
Yeah, so that is true, actually. So thanks, Steve, for that mild embarrassment on that. One of the things that Walter talked about is there's a rule in South Africa, 60 seconds or less. Mm-hmm. So one of the issues that we have, so this is a Tim view, by the way. This is not an official Payments UK view. This is a Tim view. I'd like to have what they have in Mexico. I understand that the rules there is, it's got to be in the other person's account posted within 15 seconds. So that's the kind of thing that we need to get to. And what we've got in the UK is great, but it's a bit like, and again, I talk about this, if you do exams in the UK, you can get an A, and then they had grade inflation, so they now give people A stars. So what I think in the UK is, we're an A, but how do we get to an A star?
So maybe a question for anybody on the panel here who wants to take this. So, you talk 60 seconds or 15 seconds. Clearly, I would expect that the financial institutions offering these services today or who will offer them in the future are going to have to make changes to their mobile or online banking, whatever that interface is from an authentication standpoint, How has that sort of materialized over time? Because there still is going to be all the other regulatory AML responsibilities, et cetera. So how have they managed that from a financial institution standpoint with respect to the faster speed?
Well, I think the AML and things like that don't really come into it because these are all domestic payments. So you assume that the KYC and AML have been done on the account prior to any payments taking place. So we don't actually filter or check AML on these kind of payments because they're all domestic. Mm-hmm. So we're assuming that the accounts have all been vetted before any transactions take place.
Okay. What about authentication?
Well,
if you're moving larger amounts immediately, not
well,
irrevocable.
in our case, it's channel dependent, so it depends on the bank. So depending if it's a mobile phone, you'd use that kind of authentication. If it's an internet banking facility, it would be different. So it really is up to the bank that's providing the service to authenticate and to manage the risk at that point. And while the system has got a limit of 5 million rand or $500,000, each bank can manage its own limits per channel or per customer as they wish. So it works quite well.
And on that, I'd add in Australia, actually, there's no limit. So there is a limit in the UK and there's a limit in South Africa, but with Australian, the new payments platform, there is no inherent floor limit. It's up to the banks and their own risk.
Have they shared how they're going to manage that as yet?
No, that's not in the public domain, but I think in mobile banking applications, I think in the UK, where that's been the main approach to offering the faster payment service, and most of those use two-factor authentication currently. So there's strong authentication for the transfer of high values, certainly.
So how are those limits managed today? Because some have limits, so you don't have a limit. Every bank. Is any of the jurisdictions going to have minimum limits that need to be supported?
I would just say that the limits are purely there for interbank risk exposure, so systemic risk exposure.
Mm-hmm. Okay.
And that's why we've got multiple intraday settlement opportunities. On weekends, in fact, our limit is a little bit lower because we don't have settlement taking place between banks on the weekends. But if you want to do a higher value payment, you just do the RTGS payment, which is accessible to consumers and corporates as well. And in fact, the consumer probably wouldn't even know. If they did a higher value payment, it'll just be rerouted through the RTGS. As long as the bank is happy to do that, they would not even know that it went through the RTGS rather than the retail clearing system. So the limit is more of an interbank settlement risk mechanism rather than something that's imposed on the system as a ceiling.
Okay.
I think Walter brings out a good point, and that is one of saying, how can you take advantage of certain processes, certain tools, and apply them to multiple payment types? So if you have a fraud system or fraud routines, it's great if you can apply it over multiple payment types, right? If you have a directory and you want to, use an email or a mobile phone number,
right.
And then speed is the calibrator, right? Yeah. Why wouldn't I use that directory, for something I want to go the next day versus something I want to go real time, right? So again, I think if we think of the ecosystem a little bit broader and say, what tools do we have already? What else do we need, and how can it apply to more than one? And make it transparent to the consumer, to the business, kind of behind the scenes, right. Then I think greater value is created.
Okay, great. So I'm going to follow on with a question for you, Jen. So the U.S. is in a unique position. Thousands of banks participate, obviously, in the ACH. And so what unique challenges have you felt and dealt with, and the industry has dealt with, leading up to your September implementation of same-day ACH? And what challenges might you see as you move forward with your plan?
Yeah. So the challenge is the number of financial institutions. So those of you who were in an earlier session today heard the number 16,000. I really think it's just above 12,000. But we're up by 4,000 or so, no big deal.
Except for those 4,000 banks. Yeah.
And seriously, it's part of the reason that it is unknown is that virtually 100% of all the financial institutions, large banks, small banks, credit unions, savings and loans, whatever, connect to the ACH network because it supports, direct deposit to payroll. But many financial institutions have multiple routing and transit numbers, so they show up multiple times due to acquisitions or other things in the past. So the number is a little elusive from that standpoint. But to get back to your question, the number is tough. And the reason it is that as a sender of a payment, you want to have the certainty and that surety that it can reach anyone. Otherwise, you're going, okay, doesn't work for me, right? And even though there are, X number of large banks in the country that handle a very high percentage of deposits, you have many, many thousands of banks supporting millions of consumers that aren't necessarily with those banks, right? So if my relative in Omaha, wants a payment from me, but they're not connected, it just doesn't work, right? So that certainty and the surety to reach everybody is enabled on the ACH network by our rules that mandate receipt. Right? And it says everybody has to implement at exactly the same time. They have to receive in exactly the same way. They do have to deliver to their consumer in exactly the same way. So we don't vary from that because that is what we have found creates the value for the originator. And so the challenge in how you work with it, unfortunately, is finding that happy medium, which is sometimes hard to find. But it says, how do you have just enough commonality in what's required and mandate that for all receiving, make it cost effective enough, and then allow for innovation on top of it, right? So if the end user innovation is there for someone to originate, that's great, that can be a one-off, but they can't have issues relative to when availability of funds will be at the receiver, right? Because that's needed.
Right.
So it's a balance, and it's not always easy.
Did you get pushback from any of the small banks or associations representing small banks after the mandate was issued? Just given the impact on them and their operations, right?
And part of that is that our rules don't just go to the banks. They do, as I said, go out to the end users to say, you need to have availability by this time, right? So that there's surety of that. And there is a myth that has been perpetuated by the press in the United States for the past couple of years. It said, big banks were against moving forward. It was really a lot of the small credit unions who said, I'm not equipped to do things, at 5 p.m. because I close my books, and we call her Mildred in the back room, goes home at 3 o'clock. And the response is, well, just tell Mildred to stay for 2 more hours. But it's not as easy as that because none of their systems work that way. And, it is one thing to get the scheme, the network, the hub designed, but then the huge variations in how the banks and credit unions run their systems, both from a technology and a personnel and process standpoint, does make it very hard to integrate in the end. But at some point, you just have to say, you got to get over it and get to the next phase.
The beauty of mandates.
Yeah.
So Walter, I think, so you mentioned almost a decade that you've been at the faster payments now. So I know you've got some other initiatives underway in South Africa. So an automated collections project and then some other modernization initiatives. Can you share? Because, again, it would be insightful perhaps for us here in Canada to say, where's the next sort of phases going?
Yeah, I think the real-time clearing initiative, that was a really specific initiative because the pressure was on to do things immediately. But the electronic payments railway tracks have been around for many more decades than that. And the biggest single limitation is really the number of bytes that we had available to put information in, not just payments information, but beneficiary information, etc. So that is one of the biggest needs that we have at the moment is for richer data, not just the speed of the transaction, but more information that would make the payment more useful. So we've embarked on a modernizing a payments program, and the program is electronic payments based, so it doesn't affect the card systems. I think the card systems are are in a way global systems dictated to a large extent by Visa and MasterCard. So we're focusing on the electronic payments, and it's all about richer data. It's about standardization. So we are talking about ISO 20022. That is a standard that we've decided on. And in essence, we're talking about 4 payment systems. So the first one is, in fact, the real-time payment system, which is currently based on ISO 8583, which is a card standard.
Right.
And we want to convert that to ISO 20022. Just to standardize it. And then we're also looking at retail credit payments, high-value credit payments, and then also retail debit payments. Strangely enough, our focus initially is going to be on the debit side because there's another project that's sort of overlapping with that, which we call authenticated debits. And authenticated debits, what that's all about is ensuring an electronic mandate for a direct debit before we actually trigger the payment. So currently, the way it works, you've got to have a paper mandate or a voice mandate, which would enable a debit order or a direct debit. The problem is that sometimes you get rogues in the system that introduce a file where there is no mandate, and you find it out after the fact. And so we've recently had an increase in the numbers of disputes on debit orders. Sometimes they're legitimate disputes because there is no mandate and those transactions just get returned. But in some cases, we found that South Africans aren't as ethical. They just return the debit order because they don't like paying their loan that they made a few months ago. So that's been a problem. So we've embarked on this program called Authenticated Collections. And what it means that before a debit order can be registered with the paying bank, they have to be sure that the account holder has electronically authenticated the payment. So let's say you do agree to a insurance policy. Before that debit order can be registered with the paying bank, the consumer has to authenticate it, and the term of the number of deductions on what day of the month and the amount would be registered on electronics mandates database, and it's all ISO 20022 based. So that's really a major project. It's going to take us quite a few years to get in, but we are planning to have the system in for pilot by about middle of next year.
Okay.
So that's the first, I think, big part of the process. For the rest, we'll probably migrate to ISO 20022 in parallel. And we're looking at, we don't have hard deadlines yet, but we're probably looking at about another 3 or 4 years migration period.
Okay, great. Thank you. So I'll ask one more question to the panelists, but encourage folks in the audience if you want to start thinking of your questions and make your way up to the mic. But I'll ask one question in the interim to Tim. So Tim, the introduction of the payment system regulator in the UK, I wonder what the regulator is focused on and perhaps what your views on some of that are as well.
Okay, so thank you for that really easy question. We are blessed in the UK of having the first competition regulator for payments in the world. That regulator is pretty new. They're all economists. They don't know a huge amount about payments, but and by the way, this is a Tim view. This is not Payments UK view. They all look like they're 12 years old. But anyway, so that's the unofficial version. The official version is they are a regulator, and as an industry, and this happens all over the world. There are things that help to move industries on. One is gentle pushing from regulators. I think the view in the UK was that they wanted to give it a little bit more of a shove, so we have a payment system regulator. The other thing, of course, that helps is customers pulling an industry as well. And certainly we see a lot of pull happening in terms of payments, not just in the UK, but around the world by people like Apple Pay and Samsung Pay that we've heard about this morning. So a lot of that is going on. But specifically, the PSR is a competition regulator. They have 3 broad objectives, one of which is to promote competition. The second one is to promote innovation. And the third one is to ensure that the industry focuses on the needs of its users. Now, the theory is that as an industry, we kind of do that anyway, but the view is that having a regulator is helpful. So
that's the official view.
That's the official view, yeah, absolutely. Yeah. And the reality is, we have a good working relationship with the regulator. They're an additional regulator. We also have the Bank of England, who are great, by the way, because I know there are a couple of people here from the Bank of England. The Bank of England. We've got the Treasury. We've got the Competition and Markets Authority. So for the industry, it's one additional stakeholder who has views of things that should be done. And actually, as an industry, that's a bit of a challenge. The more regulators you have, the more difficult it becomes because, I'll choose my words very carefully again, they don't always want to go in exactly the same direction at exactly the same time. They have slightly different views about how you do things. So obviously that's a challenge for the industry to respond to. But specifically on the PSR, they've done some great stuff. They set up a forum last year. It's called the Payment Strategy Forum. It's looking at a number of things that should be done. They're focusing on what they call a long list of detriments, so things that they don't like about what's going on in payments in the UK. They have 4 working groups. I'm the only person. You go as an individual to join these working groups. You don't go to represent your organization. I'm the only person in the UK that actually is on all 4 of the working groups. It's a nightmare in terms of scheduling my time and so on. And I can't actually go to all of them. And occasionally I'm in a different country and I kind of have to dial in. A few weeks ago I was in Australia at a conference and it was midnight in Australia. I was completely jet lagged and I was still trying to dial into all these working groups that were going on in the UK. So the bandwidth, that's an example of the bandwidth of the industry, which is very busy at the moment. Responding to new regulators is a real challenge for us. But specifically, those working groups are looking at access. So they're looking at opening out access to the payment systems, which is deemed to be quite challenging and complex and difficult. Rules, different technical connectivity, etc. So that's one of the things that they're looking at. The second working group is end user needs working group, and that's looking about the experience for end users, be it government or consumers and so on. There's a working group on financial crime, which is looking at things like identity, know your customer, etc., and reducing fraud and financial crime. And the last one is horizon scanning, where they're taking quite a long-term view of the industry and what should be happening out of that. Now, one of the things that we did, Payments UK did last year, we kicked off a project called World-Class Payments, and we went out and engaged with a whole stack of people, and we asked them what they wanted from payments, and guess what? Here we are a year and a bit later, and a lot of the stuff that's being talked about in the PSR forum working groups is fundamentally what we talked about last year. And it's not because we did a great job. Actually, I think we did do a great job. But the reality is if you ask customers what they want a year later, it probably fundamentally hasn't changed. And then specifically, what is happening is that the regulator is going to be publishing a draft strategy for the payments industry in the UK on the 13th of July. And what I can tell you, because it's in the public domain, you can go and look it up on the website. In terms of open access, they're talking about doing some tactical things about aligning the rules and governance of the various different electronic payment schemes, so simplifying them in the kind of shorter term. And there's also an open question about, do you actually make it really simple to access, and do you consolidate a number of the schemes which currently have separate boards, separate governance structures, separate rules, etc. in the UK. And that's kind of not quite there yet, but that's the way things are heading in the UK. In terms of the end user needs, broadly they talk about customer assurance, customer control, and customer education. In terms of assurance, it's about confirmation of pay, making sure before you initiate a payment, as I think Jan was saying, just make sure it's going to reach the other side in an appropriate timescale, but also making sure that once it's received, you have some sort of notification to make sure that it's arrived safely. Now in the UK, we've got that in some bits of the way that you make payments. So, for example, we have a mobile payment service, and if you use that, it actually responds back with the name of the person that you're trying to send the money to. So that's quite good. The question is, how do you make that ubiquitous across all payment types? The other thing that's being talked about, and I think we touched on it in something a little bit earlier, industries aren't great about informing, educating their customers about how to use the capabilities that exist in payments already. And a particular thing that has come out of the work in the regulator is about the financially disadvantaged, the vulnerable consumers, try to help them understand how payment systems work, what their roles and responsibilities are, and also what the industry's roles and responsibility are. We do a lot of work on that, but the result, the outcome from the forum working groups is that's not good enough, so there'll be an education piece. The financial crime, a lot of the financial crime piece is about data, which by the way has also appeared in user needs, is providing more data around payments, not sort of a snake swallowing a pig, shoving loads of data around the payment system, but providing enough information with the payment that you can go off and access what that payment is all about. The way to look at that is just imagine that you could go on your online banking, you see a payment, you're not quite sure what it's about, you can click on it, and then you can see the invoice that's associated with it, or your utility bill, or an Excel spreadsheet full of various different payments that make up that payment. That's the kind of stuff that's being talked about. Okay. And then last but not least, in terms of the
last, are you sure?
Yeah, the horizon scanning piece. The horizon spanning piece. We're looking at how do you make a fundamental change? How do you make a fundamental change to completely restructure the industry? And
that's it.
Yeah,
that's it.
That was exhausting.
Yeah.
I mean, you talk about three breaths,
a lot going on.
but I do want to pick up on one point, which is a really critical one, is that the role of the regulator. Because certainly our observation is that all of this big change that's happening have been predominantly regulatory driven. So the question to all of us here is, why do we wait until the big stick comes up before we actually act on anything? Certainly our experience with the industry is can't make a decision, but when they do, it's fine, away. But we've had initiatives that have taken 10 years or a decade to make a decision, 18 months to implement. Bloody hell, we can't wait 10 years now with the way the market's moving to make a decision. So after the event, we then talk about being customer-led and market-driven, but the thing to reflect on is why do we wait so long before we act? If we are truly market-driven, the regulator should just come and thank us rather than tell us what to do, is certainly my take on where we're at as a global industry.
I'm going to ask Amanda to come up. We only have a few minutes left for questions, but if folks have questions, if not, we'll get Amanda to ask.
I think we've got one in the room here. Yes?
Take the mic?
Yep.
Okay, so I do understand why P2P, you look for immediate payments. So in Canada, we have Interact. So Tim, 7 years ago, I was sending my daughter in university real-time payments through email money transfer. What I would like the panel to share with me and us is case studies or use cases of why corporates would want 24/7 payments or real-time payments. Thank you.
Well, I'll kick off. I mean, I think you've given quite a few good examples of why corporates want to do that. I mean, one of the very, very typical ones is salary payments. Sometimes you've got contract workers that you're not sure are going to be there at the end of the week or on a particular day. You want to pay them at the end of the day. And so you want to be able to pay them after the work is done rather than assuming that the work has been done and put in a batch file. So that would just be one of many examples. It's obviously quite useful if you're waiting for a delivery to make a payment then, or before you confirm an order, they might want an immediate payment before they release the goods. So I think there's many examples.
I think from an Australian perspective, actually, we don't think the big exciting thing about MPP is the speed. We think the big exciting thing is the data-rich element of it. And so I think the speed, the decision was to go with the speed because it's possible the RBA gave a very good steer on that. Let's do it because we can do it. But that was a bedrock starting point. The really exciting thing is the information that can go with that payment. And that's where Australia has taken a different starting point, I think, from the UK. So ISO 20022 was a really important part of that. And why is data important? Well, if you think about the efficiency that, there's no good in having a country that has 6, 7, 8, 9, 10 different payment systems. But in terms of efficiency, you need a payment system that is data rich. So how would you get rid of checks? Well, you'd put a virtual check through MPP. So I think it's that, the use case, it's data rich. And there I think every corporate can imagine why they'd want a data rich payment system. So slightly different answer, but I think that's the perspective that we have.
Yeah. And in our consultation in Canada as well, we found that corporates really wanted data more than speed. And in fact, same day was generally good enough in many use cases. And I would think that would also probably apply for same-day ACH, right?
And I think there's just one more lesson learned, and that is, as I said earlier, the U.S. has a lot of information with our ACH, right? And a lot of different variation in terms of how the data can be formatted that allows for straight-through processing that is great. But, and this is the but that applied to the credit unions too, you have to have systems on the other end to be able to do something with it.
Right.
So not only the lesson learned, but the preparation is start getting the corporate systems ready too to be able to accept it, to do something with it. And even as we say, with same-day ACH, there are rules around availability, there are rules around when you have to apply the received funds to the account. Right, so if it's a large corporate with downstream accounts for their consumers and they're not used to posting it on the same day, they have to do that too, right? So you just have to kind of think through the ramifications and then say, how much work is it to be able to say, is it worth it?
Any other questions in the room? We're pretty much at time. I have one question, and I actually might toss it down to you because it's one of those kind of hairy ones. Sure. But
and because I have no hair, you're throwing it to me.
No, I was not going there.
All right. Because Walter could answer it too.
We're talking about modernization around the world, and I'm just curious to know, in all of the modernization that's going on, where global fits in, where the ability to act globally. I mean, I get that speed has been important, and internally there's a lot of process and systems that have to be in place, but where are we thinking about global transactions?
Yeah, so I think certainly as we've embarked on our efforts here in Canada, the focus for us first was domestic, clearly, but we heard in our consultations as well the need for improved cross-border payments. And specifically in our case, north-south, right, with the United States, given the trade corridor that exists there, that's important that we figure out that solution first, probably before a broader global solution. And that seems to be consistent, and certainly that the panelists, if they want to chime in, but has been focus on domestic first, because that's the largest, the most popular use cases and opportunities to solve problems. But then I think everyone else is also looking at global, and this is where I believe ISO 20022 will actually help, right? Having a standard. And there's slight variations internationally now, but as we coalesce on sort of a single standard, then that'll end up enabling that much faster and much easier.
Yeah, certainly global for us is important. We're an export company, and the government's screaming for more of that export money as GDP, so they want it to see go from 30 to 40%. You can't achieve that without a really effective global payments infrastructure. And the other thing that we've been kicked up the butt with is remittances, particularly over the Pacific region. So that's one thing that we're looking at. And who read the Cook Island newspaper on the 16th of June the other day? Oh, thank you. Yeah, you did. So what they announced is the government is actually putting funds aside for the F16 and F17 year to investigate being part of the New Zealand payment system. So that is a way that larger entities such as ourselves with a modern payment system can support close neighbours, if you like. So we would see 1 or 2 or 3 of the nations coming into the New Zealand payment system, which would be really cool. So remittances, thing of the past, that would be all through internet banking.
I imagine a big deal for Canada too, remittances.
Yeah.
I think in Australia, globalisation has also been a key theme in the consultation, and a specific example is through the Australian Payments Council. We're looking at digital identity, done a lot of work with the banks and government on digital identity, and clearly everyone's global in their digital identity now. So globalization is a really strong input to how we think about how we move forward.
Well, that's all we have time for. So, Jeff, thank you very much. And please join me and Jeff in thanking the panelists.
Thank you.
And I should note, I was teasing Jerry earlier about the acronym for Payments Canada being PC and it being overly political, but at least it's not the UK where the acronym is PUKE. I'm just saying. Just a couple of brief housekeeping notes, and that is, we do want you to go use the Great Works function on the app. When you go into the app, it actually is going to show up on the first page of the app. It says, have your say, and drill into that. This is where you get to give your feedback and thoughts about direction, so please do participate in that. You are all, I hope, heading off to the Interact Payments Panorama Rodeo on the grounds of the Calgary Stampede. Just a couple of notes about that. 5:30 is when the buses are leaving from the Westin. You meet inside, not outside. If you're going on your own, you want to go to the agricultural building. You want to be dropped off to the agricultural building. Staggered returns start at 9 p.m. The last bus leaves at 10 p.m. If you miss the last bus, God bless you, you're on your own. So just find your way back here with or without a steer or whatever. But do enjoy yourselves, be safe, have fun, and have a great evening. And again, thank these great panelists.